What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ETON for Eton Pharmaceutical. On the left-hand side, we are looking at the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Let's start out by mapping out obvious areas of support and resistance from the daily time frame. First, I would certainly argue that here, at right around $6 is an obvious area of resistance simply because we had a prior set of wicks in here. This one got very close, and obviously the past 2 days we've struggled to get up and over that area here. The blue line is the 50 SMA and the green is the 200 SMA. You can see that the 50 is acting as resistance right now as well. So, slight concerns that 2 days in a row we were not able to really close and hold above 6, even though both of these upper wicks did get up and over in both instances. So that's going to be the key area to watch. If we can break it from the daily perspective and the 50 SMA, I would argue we come into our next area of resistance from the daily perspective at $6.33, which is acting as a bit of a pressure cooker top. And what I mean by that is that we have 1, 2, 3, 4, 5 touches in a row to that area. The sixth, if we get it, we should back off maybe once and potentially break it on that, next time that we come into 633 on some momentum. And a perfect catalyst for this could potentially be earnings. So that's a potential bullish idea to watch out for here, the break of 6 to take us to 633 and then monitor for continuation higher. What I'm really liking about the two candlesticks that we've printed on Thursday and Friday are the lower wicks. And what that's telling us, of course, is that buyers are stepping up and, sort of responding to any sort of selling activity that was going on. If we take a look at our 30-minute time frame, let's see if we kind of got it right here. Certainly with that $6 mark, again, you can see that no candle closes happened up and over that area. There could be, some argument that there is a minor area of resistance here as well, simply because it's acted as a triple top, essentially 1, 2, and 3 towards the close there at $5.90. So maybe you just think of that area as a zone. What I am noticing here that I would want you to have on your charts, though, is this support trend line, something that would roughly look like this. And all we're trying to visualize here is the fact that we are forming higher lows. So low, higher low, and higher low here, forming a bit of an ascending triangle, right? Something that would look like that, which of course is a bullish pattern. So looking for the breakout over $6, over that 590, if we can get that into the sort of earnings catalyst coming up in the earlier parts of next week. To the downside, if I had to map out a line in the sand to remain bullish on this particular setup, it would probably be in this area from the daily perspective at $5.50, simply because we had two lower wicks there. And if we were to revisit that area at this point in time, we would be breaking the support trend line that we've drawn in, and therefore, sort of foregoing the higher low pattern. So that's kind of my line in the sand. Anything underneath kind of invalidates the pattern at this point. You want to see it hold up, consolidate somewhere in here, and then boom, take the break as we've discussed now over $6. So if you found any sort of value in this video, if you enjoyed the content, let me know down below in the comments section or by simply leaving the video a thumbs up. Don't forget our main channel is linked down below in the description. And that being said, we wish you all a green trading week.